capital gain tax, what Europe has done, everything will converge to one rate, maybe 20%, maybe 25%, whatever that is. So in a sense, if you have a very long term, and I make this point over and over again, that if you're a very long term investor, you be prepared that you will end up, if you're actually booking profit much later, you will end up paying much higher taxes
I think the
eventually.
sound way of looking at it is if you're making money, you pay your fair share of taxes, right? That's probably what the government is thinking.
So Manish, just to come to you specifically on the STT, which the finance minister mentioned on finance futures and options, because we've been talking consistently before the budget what will come on F&O. How do you see it? Do you see it as a dampener? Do you see it as a small slap in the wrist, not as bad as what was expected? Where on that scale?
It isn't as bad, right? You know, we sort of, at least I thought that this income would be speculative, and therefore the tax rate applicable would go up quite substantially. It turns out to be more benign than what at least I thought.
Ravi, just your take on that?
Yeah, I mean, if they had classified everything as a speculation and straight away the highest slab of income tax would apply, that would have been a big dampener. I think that has not happened. So from that perspective, I think incrementally it might impact the volume a little bit because it does change the economics of the trader and the kind of strategies that they deploy. They deal with very micro moves. So for them, it does make a difference. But from the overall market and system point of view, I don't think it changes in a big way.
Okay, you know, we're getting Pranav Sehta in moments from now as well. But Manish, what quick word actually to both of you. I mean, the tax thing has enveloped the mind space, but 4.9%. The glide path. This was not expected. I mean, people thought 5.1 ka 5 hoga.
5, I thought, yeah.
So, it's come to 4.9.
So the big saving of 50 basis point right now is being deployed. 50 basis point because of the RBI bounty and better run rate of taxes is 50 basis point of GDP. That's being deployed in actually 20 basis point of fiscal consolidation. So in some sense, it remains a bond budget that we argued last budget also. Surprisingly, to me also surprising that the capex number has not risen. So I thought that
surprise. I mean, there are 8 months left. How can the economy absorb a higher number?
No, if you had a 1.5 lakh crore to spend, okay, especially when the nominal GDP is now starting to slow, you sort of would keep the momentum. So that capex I thought 1.5 lakh crore of RBI plus tax bounty would get deployed in some form in capex. That's not happened.
Okay.
So that's surprising to me. A lot of it, we will discuss jobs and MSME schemes and employment schemes, and we'll discuss, but there are a lot of positives.
Just before we get to Mr. Sehta though, Ravi, the same question to you really, the 4.9% number.
Yeah, no, clearly I think government has chosen the path to stay on the fiscal side rather than give in to the consumption side or the welfare side. Yeah, I think they have surprised us positively on that side. I think we spoke about it 7 days back also. Yeah, I was not expecting a 4.9% number. There was the way the political compulsions and also the way the read from the election result was that should spend some more on the bottom of the pyramid. But I think the government has decided to strictly stay on the path.
Yeah. So the voter is not a constituency. Again, if you see the budget, even the coalition dharma, in some sense, a lot of Andhra and Bihar trade.
Yes.
Trade meaning it.
Yes, we get what you mean.
A lot of Andhra and Bihar allocations.
Is still through multilateral funding and long gestation one. So in some sense, it's not a direct door.
But there's 15,000 crores for Andhra Pradesh this year.
Very small.
It's not as bad. So
just a quick check on the bond market, because I think we're talking about the glide path and that 4.9% number. The rupee should have seen some reaction, and so would the, because I think Manish calls this a bond budget in that sense, right? But a big sort of uptick is what you'd expect between now and the next couple of months. Remember, after India's inclusion in the JPM, the hope is that with very good fiscal discipline, a re-rating could be around the corner. And if that does happen, all stakeholders will stand to benefit. And I think that's what's a key takeaway, that fiscal discipline being very significant. We also got Pranav Sehta joining in. Pranav, you want to come in on this? Are you impressed by the fact that they've reduced it from 5.1 to 4.9 and for next year, sub 4.5?
Absolutely. I think that's a great move. They have tasted success over the years because of the great macro management, I would feel, and that continuity is very evident. They have not compromised on the fiscal deficit at all. In fact, they've improved significantly. So I would think full credit to the government for this through the period, particularly also in this budget. Despite all the expectations of welfare measures being higher and so on. So I think it's a great move. Yes, of course. From the direct taxes side also, there are lots of measures. Maybe we can come to
So
it.
let's unpack it one by one. Let's
Yeah.
start with the capital markets focused tax changes. So long-term capital gains tax, short-term capital gains tax, some categories for 2 years, some for 1 year, and STT. So let's unpack that portion first.
Right. So I would feel that the short-term capital gains tax increase from 15 to 20% was something that I wouldn't say was completely unexpected, given that probably they wanted to temper the short-term trading a bit, and that might have been the provocation as well as raising some revenue. Also, some amount of equity in taxation. If a salary taxpayer or normal business income, small business earner pays tax at 20-30%, short-term capital gains tax, probably they wanted to show some equity as well. So that's something that was pretty expected in some sense by me at least. The long-term capital gains tax was a little of a surprise, yes, indeed. And I don't know how the market will take it, because I don't think the market expected it as well.
Not too well so far.
Yeah, not 12.5. But I think that looks a little early in stage in terms of implementation. I would have felt that given that there is an STT in place, given that the collections from STT are so robust, given that they want to give a fillip to the domestic capital being invested in risk-bearing financial assets, which has been going so well, that's one move that I thought was a little earlier than what I would have expected in the normal course. But certainly I think overall the steps have been good. Another thing which, of course, one has to see the fine print, but it seems that debentures, etc., also might probably go into the normal tax rate bracket instead of the 20%. So last year we saw the indexation benefit go away on mutual funds and so on. And now if the concessional tax rate also on that capital gain goes, which one has to see the fine print, if it goes into the regular slab rate, that might be another big move.
But that could be good for deposits.
That could be good for fixed deposits, and probably
and
that has been the provocation.
That is
So
the
they've
purpose.
not
That seems to be the provocation to bring.
I don't know,
so,
we all
Manish?
can agree
So
with.
it-
Actually,
it's
just one thing.
also
Also, MLDs is such a small.
No, that's dead already.
That's
So
dead, right?
MLD,
Yeah.
You know, we killed.
A couple of years ago.
Yeah, 2 years ago. We killed direct access to bond markets now. That extra incentive that you had versus mutual funds. So if
gone
you
now.
go to mutual fund, you get taxed as normal, in fixed income. But in the bonds, if you were listed and you bought, there was a capital gain of a
Concessional
listed
tax.
instrument, concessional rate. That's gone. So in some sense, it's fair, right? I mean, Ravi is directly investing and I am investing through mutual fund. Why should he benefit I mean, why should I not be same as him? So in some sense, it's a fair thing to do.
Yeah.
And it's for the super smart dudes in this
treasury
country,
guys,
treasury
probably.
guys,
The
and
big quantum
the
of
big
money.
HNI.
Yeah.
This government, let's
Sub-equal
level it all. Sabka saath, sabka vikas.
Okay. Yes. Okay, Mr. Sethia, anything else on the tax front? Because there's a lot of other stuff.
I would feel again abolishing angel tax is a big positive, especially for entrepreneurs, small businesses, startups, the whole ecosystem, and including for foreign investors who always wanted to enter the private equity and VC funds, so to say. So I think that's a great move indeed. The dropping of the foreign companies' corporate tax rate from 40 to 35 was again something that was very, very welcome. I think it was expected as well, because when the corporate tax rate on Indian companies came down, they had not brought the foreign company corporate tax rate down. So I think that again is a good leveling off in terms of both foreign companies as well as Indian companies. Also, some of the trust building measures, the TDS rate rationalization, etc., seems to be a good move, very good move indeed. Again, focus from a personal income tax standpoint on the new tax regime, increased standard deduction, and some amount of new tax regime tax reduction.
Do you think it brings it on par? Because the problem was always to move people from old tax to new tax. The new guys are happy to come into new tax, but if you're already used to all those Section 80C benefits, it's difficult to wean them off. Does this bring more parity on the face of it?
I would feel, again, those who probably get the allowances of HRA, etc., are going to continue to want to stay in the old regime. But most others, I think, are slowly moving into the new regime. There are only big allowances which are more in the nature of house rent allowance, etc., which will probably stay out.
By the way, we've got a bit of a bounce on the market, so just want to mark that the Nifty, after coming off 1.8% or 1.9%, let's get the intraday on the screen, has just moved back a little bit, if I'm not wrong, about 100 odd points, right? So is the market digesting? Was this a short blip? I think time will tell. Let's wait for it. But that's the other thing. A lot of conversation, Ravi, was around, do we tinker with the tax rate at the current point of time when the government wants to do divestments and the party is going on fine? Why tinker with it? Is this 20% and 12.5 gonna have longer term implication? Could it hit divestments? Not that divestments were a big part of this government's fanfare any which ways.
No, so it is disappointing because, as he mentioned, there was no real compulsion or any need to do it at this juncture in the cycle. There is, a corporate culture that is getting developed. Investing culture that is getting developed. There is a economic upcycle that is in place, and corporates are getting incentivized to invest. There is I think we should have probably held off couple of years more, and I think probably the step one should have been to rationalization of period. But anyway, that is all hypothetical, doesn't matter. The steps have been taken
now, yeah.
And I wouldn't have expected it.
It's not the act still. It's a bill.
Yes, absolutely.
Not that I expected.
It's not as if finance ministers have not rolled back, things which are not popular.
I don't see a capital market lobbyist strong enough for us to get this. Come on.
I agree. This is not one cohort which really moves the needle.
Yeah.
But yeah.
The review of the rate structure on customs. I think we are also told we're getting Mr. Atulal of Dixon, because there is a move that has happened there, wherein the mobile industry, there's a reduction of the BCD on mobile phones and chargers. I wonder if Dixon has corrected a bit. We'll get that in moments from now. But Manish, the review of the rate structure on customs, reversal of duty inversion, a lot of things, and the measures towards job creation, etc. Is there a rural consumption focus, you think?
It's a job focus, I would say, and instead of just rural. There isn't much for rural folks at margin in terms of absolute allocation. You can talk of many schemes.
Populism, you didn't think it was populist?
No, it's not populist at all.
At all, right.
Yeah. On jobs, many things listed. Lastly, it's mostly about, can we get formal jobs? So the EPFO linked things, the internship linked things. For the MSMEs, you had announcement that you could borrow and a credit guarantee scheme up to 100 crore rupees for any guy who's borrowing. So these are substantial. Angel tax, I guess, is the biggest deal for people like who invest in startups or are starting up. This could be messy. So a lot of these things are positive for general small, mid-sized new firm creation. And FDI linked, basically, if you bring down the taxes for the Firangi firms, foreign firms, that's also a positive news. So it is not populist. It will bear fruit in only few years, so to say. There's nothing now and let's do something today. Even for middle class, the total amount that someone calculated in my team is about $1,400-1,500 saving.
On the new tax regime,
I have few 5 stars, and that's about it.
No, so savings on what extent? From new tax regime?
Yes.
Okay.
Yeah.
So okay.
Every day 5 stars.
So she said that I think 17,000
max.
Yes.
Is
On
the
a
max
50
that a
lakh crore
person could
budget,
get.
the 17,000 is all that you transfer to the Twitterati middle class. It's a
Middle
very
class
small
is
amount.
not Twitterati. Twitterati is a different class.
No, your definition of middle class is very different from what I think of middle class. You think you are middle class, right?
Yeah, absolutely.
You are super rich in this country.
Right. We also have Atul Lal, Vice Chairman and MD of Dixon Tech, joining in. Hi, Atul. It's Amina. Thank you very much for talking to us right after this budget. First up, before we go into the BCD reduction on mobile and chargers, how are you reacting to this budget?
You see, I would like to really compliment Honorable Finance Minister. Please appreciate we are a highly labor-intensive manufacturing industry, and certain steps that have been taken to encourage and incentivize labor involvement, operators involvement, I think it's highly commendable. Particular emphasis on skilling or internships are most welcome, and also a special focus on MSME industry. Because that's the backbone. Please appreciate the electronics manufacturing industry. It's in a formative stage. It has It is growing extremely fast. It's hugely labor intensive. And for creating an ecosystem, the MSME support is required. So I strongly feel it's a very positive budget for our labor intensive industry. Yeah.
Lal, just very quickly, very specific to your industry, and I know we've got it's commendable. We've managed to pull off a good budget, not disturb too many things, still focused on Viksit Bharat, focused on employment. So lots of good things as well. But one thing that maybe Dixon could get impacted is the BCD reduction on mobile and chargers. What does this mean for a company like yourself? What's your reaction to this?
No. Please be rest assured that mobile manufacturing in India has reached a stage that all the mobiles being sold in